welcome on board the management of Dabur India as well. Ankush Jain, the CFO, is joining us on the show. Ankush, hi, good to be speaking with you. To begin with, help us understand the kind of numbers that we have seen in the quarter gone by. The India volume growth was just around 4.2%, and also the oil business has seen a bit of a decline, hair oil that is. What's the prospect looking like for FY25? Is it going to be better than FY24, you believe, in terms of growth rate?
Yeah, hi. First of all, good afternoon to you and all of your viewers. Before I get directly into the your Q&A, let me first of all give you a brief overview of the financial year, because that's more important. We closed the year at 7.6% revenue growth, which on a constant currency was 10%. Our operating margin grew ahead of top line at 10.9%, 11%, but adjusted for a abnormal cost, on a like-to-like basis, it increased by 15%. So almost 2x of the revenue. And likewise, the profit after tax, while we reported 8% full year, on a like-to-like basis, it is 17%. So overall, I think we have met our operating guidance, which we gave at the beginning of the year of about 19.4% operating margin. We are almost there. Now, coming back to your specifics in terms of how oral care and hair care have grown. Oral care has done phenomenally well for us, and in fact, it has grown by almost 18-20% in this quarter. It has also gained 10 to 20 bips market share, and happy to announce that we are already number 2 player in oral care, and with 50% penetration in the country, which means every second household in India, uses one or more of Dabur oral care products. So that's very heartening and encouraging for us. Now, coming back to your oral hair care, question. Hair care, yes, while the growth has been muted, but it is important to understand that we have gained market share significantly, almost 115 bips. There's a bit of pressure in the category, but we are doing relatively better and increased our market share as I said by 115 bips, which means our strategy on ground in terms of reaching more consumers, more increasing our advertisement spend is actually helping us. So I think in both these categories, while intense competitive intensity, but we have gained market share. But just to add on, in fact, 95% of category combinations we have gained market share. Now, the third part was, how do you look at FY25? Is it going to be better than FY24? FY24, obviously, there was, a bit of a challenging operating environment or macro environment, especially for FMCG companies, given muted rural growth. But as we look into, we are seeing some green shoots or some very early signs of revival. In fact, this is the only quarter in last 3 quarters where rural growth has been slightly higher than urban growth, while in last 2 years it has been declining. So it's positive for us, Dabur, because our 45% of the saliency comes from rural. So I think we are optimistic that next year should, at least from a volume perspective, be better than this year on a full year basis. Yeah. Though recovery, more optimistic recovery may happen from Q2 or maybe Q3 going forward. Yeah.
Could you quantify that a little bit more? When you say that the green shoots are visible when it comes to rural recovery, what segments are working and what segments are not performing when it comes to the rural demand?
Yeah. In terms of first, some bit of quantification, the rural over last 2-3 quarters or 2-3 years was lagging by almost 400 bips in terms of growth. So if urban was growing by 800 odd bips, rural was growing by 400 bips lower. This is the only quarter where it is growing by 100 bips higher than urban. The rural category is growing. In terms of categories which we are seeing positive inroads, especially home care, things like air fresheners, toilet cleaners is growing maybe higher. Secondly, also, toothpaste and that brushes and paste, etc., oral care especially, is also doing much better in both in rural, in fact, higher. And
Sure.
also for us, this company, we have grown 200 bits higher in rural. Yeah.
Sure. Ankush, a couple of specific questions that I wanted to ask you. A, as far as the juice business is concerned, given we are all set for a harsher summer, what kind of volume uptick you expect in the juice business? And secondly, there seems to be this, extra vigilance from FSSAI and the other food bodies regarding spices as well as health drinks. Given all of this, what kind of impact you are envisaging for your spice as well as juice business?
Okay, so I'll break this into two parts. First of all, is about juices and all. While juices, we know it has been almost muted this year, but on a CAGR, it has been the highest growing category for us, almost 10-11%. Now with scorching, sun and temperatures really going really high, we are very optimistic on juices, and also people stepping out, the out of home consumption and also in home consumption. We are quite bullish on juices this year. It should get back into the growth trajectory. We're also launching new products and new variants within this. We expanded our total addressable market. We're getting into drinks. We have recently launched fizz also, which is more carbonated. So we are targeting a high high double digit growth, 10 to 15% in terms of volume for juices. The other part of your query question was what? Sorry.
Particular, what I want to ask about is how is it that you see pricing? Yeah, go ahead. You're making a point.
Yeah, sorry. The next part of your query was on the spices.
Yeah.
Yes, there's been a bit of news on spices. While our spices conform with all the FSSAI regulations, and I think that was more general, since the regulatory bodies have become, I think, more vigilant. But I must say, as an organization of repute, where the quality is at forefront for us, all our products, every product we manufacture, they comply with the relevant regulatory bodies. In case of food, from the FSSAI, in case of medicines or herbs or OTC, the Ministry of Ayush guidelines. In case of home and personal care, the relevant regulations they are complied with. Their quality standards, both at incoming raw material level as well as outgoing finished products, their batches being monitored. So I think we're pretty confident that all our products are pretty safe and compliant to the highest levels of quality in the country. Yeah.
The other thing I wanted to understand is, especially in the food segment, what about the pricing trend? Are there any segments where you would have to undertake a price increase even at the cost of volumes? Or do you think protecting volumes right now is the main stay?
Oh, it's not an easy answer, but I think we will go in a very mixed bag. First of all, even in last year, just to give a perspective, while there was some bit of deflation, we continued wherever possible to protect our margins, take price increases, because we believe that we have brand power and pricing power. And in fact, wherever we are market leaders, we were the first one to take up prices and give more value-added products and more premiumization. So and when I'm saying pricing, it's a combination of pricing as well as premiumization, more offering for more affluent, for more urban consumers as well, especially with e-com and modern trade coming. People are looking for premium products. So I'm combining that. And next year also, wherever there are possibilities, we play, to protect our margins. That for us, that is paramount. And coupled with that, gain in market share. So I will say production of market share and then production of margins, if I were to order these two. But absolutely we would want to grow our profits slightly ahead of top line. Yeah.
Because I was just going through your operating margins, it's at 19.4% for the entire year, with the EBITDA margin being around 23.2% levels. Could you talk to us about in the coming year, given the fact that you are looking at calibrated price hikes, what could your gross margin and EBITDA margin profile be in FY25?
Yeah, before I answer that, some bit of clarity.
Sure.
19.4% while we have reported, this also factors an abnormal cost, which happened for the first time this year. Everybody is aware of this legal issue in US. Adjusted for that, our operating margin is 20.2%, which is similar to pre-COVID levels, which means we have cycled super hyper inflation of over two years, coupled with price increases, saving initiatives, more value addition, we have more value levers, etc. across the organization. Now, as we scale up, while the scale will give us some operating margin leverage, and part of it we would want to reinvest and redeploy to generate demand because, as we all know, some bit of categories are still under pressure in terms of growth. So our first priority is to generate demand, and then pass on the residual synergistic benefits to operating margin only. Yeah.
Wrap up the conversation. Ankush, you've been talking about how increasing market share across categories is a very important factor for you. Just wanted to get a sense, given that other competitors in the Ayurveda space, namely Patanjali, has been going through a lot of, negativity around the Supreme Court case, which is there. The spices in the other brands are going through their own issues. How much market share have you gained in the spices as well as the Ayurveda segment? And what do you expect to achieve over the course of next 6 months? Because it's a very opportune time for you to try and gain those markets.
Likewise, we are also very bullish on these two categories, especially with the competitor, getting into scanner for whatever reasons. But we, as I said earlier, we are compliant on quality and we believe in the highest standards of quality with all the regulatory bodies. And therefore, we think we will be able to gain market shares as Dabur being a brand for 140 odd years. People have trust much more than anybody else. And we being the largest Indian FMCG MNC player. So I think people believe in our quality and trust. And so do we, comply with all the standards. And hence we would be, dialing up our efforts in both distribution and driving awareness, especially in these categories, which is Ayurveda and spices, to gain market share and to get more and more household consumption and penetration. Because this will be then driving future growth.
Okay, good luck with that, and we'll speak again soon. Ankush, thanks for taking the time out and chatting with us.
If you like this video, then like, share and subscribe to ET Now.